where they go and they transact the most as such. So in Africa, we launched earlier this year a product solution called Tukuze. Tukuze in Swahili means let's grow together. Right? So, and what it does is it's really taking from farmers at the farm gate, because it's Africa, big agriculture-based economy. And, but those at the farm gate don't have transparency to the end pricing of, right? So here we've connected a system where there's an agent that through our Tukuze system connects the buyers with the farmers, and it is a feature phone driven, not necessarily smartphone driven, where when the buyer places the order can, through the system, can get to the farmers into the system. They have visibility into the end pricing. The agent, once the farmer says, okay, I can get 20 bushels of this, at the overall order is 100 bushels. You get from 3, 4, however many in the system. You connect them through this, and then allow the agent to go collect the goods, deliver to the buyer, gets paid, doesn't have to go and wait. The farmer doesn't have to wait till the guy comes around, because now automatically they're getting the money, through their feature phone as such. Now, a lot of time it's women that can't leave the farm gate. So how do you enable and empower women in this to be able to have, the end visibility to pricing and transparency and so forth? So through this process, you also start to now where MFIs and others can build in, and you can start building some credit history. So how do you then look to scale, and be able to scale your, and grow more as such? So that's like one solution that's connected, and it doesn't, and the payment doesn't have to be only card. It can be cash, it can be that, but it sits within that ecosystem as such. India, I think there's been discussion earlier in India. We've working with, Amex and Visa and Reserve Bank of India and National Payments Corporation of India, NPCI. We launched a push payment technology called the Bharat QR. The Bharat QR, so instead of a merchant having, multiple QR codes, for different, networks, and for the consumer, it's one interoperable system. Right? And so that brings also, when it's push payment through the consumer, it brings about certain added levels of security and safety, and as well as no cost for terminals and for a merchant, because all you have a barcode here to be able to then transact, where you scan the goods, they get an immediate SMS, even if it's a feature phone, that the money is remitted in their account, and then they release the goods there. So lots of innovative ways, to kind of grow and include more and more, whether it is on the SME segments or other, into the ecosystem. So I'll stop there. Yep.
That's great. Steve, can you update us on Android Pay? We hear a lot in the marketplace about what Google is doing. Obviously an very early pioneer in mobile payments. Pay with Google is now something that people are talking about. You've done some just fascinating experiments with, showing up at a McDonald's in San Francisco, your face pops up on the register, that kind of stuff. But sure. Can you talk to me about where you're focused with the technology, and don't necessarily limit it to the US. I know you've launched in 13 countries, so there's a global story to tell about Android Pay as well.
Sure, thanks, Jason. And by the way, you're very safe. Jason is doing a fabulous job running the ETA. I've been on the board a couple of different times over the last decade, and we are very thrilled to have Jason
Thank you, Steve.
running the ETA.
Leon, are you recording this?
Yes. So the one word that came to mind when I was thinking about today was journey. It has definitely been a journey. Google has been involved in payments for over 6 years, and we've evolved brand names, we've evolved our approach. We started out with the Google Wallet, and that was based on the cards that we had on file, at Google from people transacting on primarily the Play Store. Then we did a major shift to Android Pay and jumping on the EMV phone-based token approach, and we've been at that for the last year and a half. And then we just announced last month at our developer conference a totally new initiative which sits above Android Pay. So Android Pay is not going away, but this now sits on top of Android Pay, and it's called Pay with Google. Initially, that'll be primarily in for the online channel. The reason why we're doing that is that Android Pay is progressing very solidly, but we have hundreds of millions of cards on file from all the people who have bought something on Google properties, and we want to bring those to bear to help our end users transact conveniently and securely, and help our merchants who are advertisers with us, help them convert more sales. And it's a shame not to be able to bring all those hundreds of millions of cards on file to bear to help them while the tokenization journey continues. We're also doing partnerships. We've announced a partnership with MasterCard to integrate MasterPass into Android Pay. We've announced a partnership with Visa to integrate Visa Checkout into Android Pay, and also PayPal. We just went live with PayPal now integrated into Android Pay. So if you can make any sense of any of that, let me know. The biggest challenge really is the consumer value prop, is because it all, at the end of the day, should come back to the consumer and what it means for them. On the online and in-app side, it's pretty easy to grasp. It's a kind of a no-brainer. Any of you who have taken an Uber ride and you have an Android phone, you tie the two together, you take the ride, you get out at the end, you're done. It's a beautiful thing. Of course, my goal in life is making payments disappear, and then I can retire. In the offline world with contactless, it is a very different situation. The value proposition is not so obvious. So we've been working hard on trying to add value in that channel. We have relationships like with Walgreens, for example, where with a tap of your phone, you can do your loyalty and coupon redemption, and in addition to paying, because just replacing swiping or inserting with tapping is just not that dramatic of a value proposition. All I can say is that the journey continues. We've learned a lot of lessons along the way. As Jason mentioned, we've launched in 13 countries, US, UK, New Zealand, Australia, Singapore, Belgium, Poland, Japan, Ireland, Hong Kong, and just in the last month, Russia, Canada, and Taiwan. And the one thing I can say is that every single country is different, and the adoption curve and ratios vary dramatically across those various countries, and we're having to do very different things to drive adoption in those various countries, which makes it somewhat of a challenge. The last thought I'll say is, I was really hoping, sort of as just Steve speaking now, as MCX and ISIS/Softcard, disappeared. I was really kind of hoping that the market would coalesce and we could sort of get going and get some of the confusion out of the marketplace. But unfortunately, we're seemingly still very much in an expansion phase of lots of competing brands, and that's probably going to continue to exist for another year or three, and then at some point it'll come back to some sensible segment of solutions that consumers can get their heads around. Thank you.
Well, that's actually a perfect segue into Mark, because while we're doing history of payments, the Diners Club card that I mentioned actually was the first charge card invented here in New York. But of course, the first credit card out in California in 1958 was the Bank of America card, and the idea that Bank of America had, and of course it's the Visa network today, was retailers at that point were extending credit to their customers, a business they didn't necessarily want to be in, and consumers were carrying around these charge plates, a stack of them. They had one they could use at each store. And the idea of the Bank America card was, let's give them one card they can use everywhere, and let's get the retailers out of the business of extending credit to their customers, and let's make it easier for everyone. But of course, there are some retailers who are very comfortable with entering the payments business on their own, and Walmart has, I think of the retailers, has the best story to tell about really being out there, enterprising, being innovative. Steve mentioned MCX, which is something that Walmart really took the lead in trying to develop an alternative mobile payments network, really. But with Walmart Pay and all the work that you're doing there, I think it's a fascinating story. So would love your perspective on the old school world of brick and mortar retail, what Walmart's perspective is on the future of payments, if we're going to have a mobile payments dominated by Walmart Pay. Is that where we're headed? What are you working on you're excited about?
Yeah, what I'm excited about is I don't have to solve problems related to like global, multi-party ecosystem adoption, which seems to be the talk of the day. I think it's a little bit easier when you work at a company like Walmart because we only serve our customers, and that is a touch point that you can always go back to help guide your thinking about what you should do. And we don't think about payments as the end. As a matter of fact, we'd like to see payments be abstracted fully into the background, and I think that's something that a lot of panelists have said all along. So in our case, Walmart Pay was more about saving time. And it's not just the literal act of transferring money from one party to another where the time savings comes in. It's everything that happens before that and everything that happens after that and the collection of things together. So we launched Walmart Pay a year ago this month. In our 8th month, InfoScout reported that we were already the 3rd largest payment system in the U.S., mobile payment system in the U.S. And we were like, yay, but that really wasn't what we were all about. I think it was our entry into competing on a different level in a changing retail landscape, because we always compete on price, and that's our #1 touchstone, but we have to start competing on time savings because the world has changed. There's all these new entrants that are can deliver things to your door in the same day, et cetera, and we're very cognizant of that, and we're trying to figure out how we can make shopping in our world easier. And we have a huge number of assets we can bring to bear to do that. We have a store within 15 minutes of 95% of America. We have the 2nd largest e-commerce website in the U.S. We have pickup, grocery pickup. We have cheap shipping, on .com. So how do you take all those things together and just doing business with us easier? So to kind of review for folks that don't know what Walmart Pay is or how it works, because I know that we have a lot of folks from other countries where we don't have Walmart Pay. Basically, it's a you set up a profile. Anybody that has an Android or iOS phone can use any payment type at any one of our cash registers, and it's as simple as setting up a Walmart.com profile and downloading the app, and then indicating what card you'd like to use. But you could switch back and forth between whatever types of payment cards and Walmart shopping cards. You go to any register, including self-checkouts, and scan the QR code, and payment happens in the background. And you'd think that the customers would tell us that, oh, that was a fun way to pay. What do they say about it? They say, I like the fact that I can't lose my receipt because it comes to my phone. That's the part they cared about. They didn't care about the payment, they cared about the receipt. And so as an unlock, it really creates a different world, because now we have a relationship with a customer who previously was anonymous to us because they would just pay in cash or cards and we wouldn't track it, we just got a sale. In 550 Sam's Clubs today, my friend Eitan, who's in the audience, launched Scan and Go, which is exactly the same thing, except for I'm not scanning a QR code at the point of sale, I'm scanning the merchandise. I'm scanning the cereal box and paying on the phone and just walking out. I never go through a checkout. That is the next evolution of payment, invisible payment to us. But it also unlocks a whole bunch of other things. We recently made an announcement about how we're changing how pharmacy prescriptions are done using a very similar technology. So the idea is I interact with my phone to tell you what prescription I'm coming to pick up securely. We verify your identity securely through a mobile device. Your experience coming to the store is you scan a QR code, we hand you your medicine, and you leave. There was no payment. It happened behind the scenes with the same payment credentials you set up for Walmart Pay. Or maybe you're in a Walmart store and there's nothing on the shelf where you think there should be something, you scan the shelf label and we say, do you want us to send it to your house? And you say, yes, payments in the background. That's where we're heading. And I think that that's what we have to do to meet the changing expectations of customers.
Ravi, let me circle back to you just for a little commentary on that. MasterCard traditionally has operated for close to 50 years a network where the payments literally were in the background. Consumers think they carry a MasterCard issued card, and they think when they pay at a store, they see the MasterCard logo, that MasterCard's doing the payment. And of course, that's not true. You operate a network. But we're moving to a world, and you described it, where MasterCard is getting more deeply embedded in things in consumers' lives and merchants' lives. From MasterCard's perspective, do you care what form factor, whether it's a QR code or a tap to pay or a plastic card or a watch or a bracelet or a chip in my head? I mean, do you care what form factor it looks at? And what's your evaluation of the move toward mobile payments in the U.S. as Mark described it?
Okay, great. So thanks, and very, very good, interesting perspective on where the power of technology is headed. And for us, I think we are totally form agnostic, Jason. So essentially, as I mentioned, it was about removing that friction for payments. So now think about it. Now, you mentioned our at the show in Vegas about a refrigerator, and so we are constantly looking at how do you empower the end consumer and the convenience factor. Same things you talked about in terms of time savings and so forth, because let's say a mobility experience, right? Someone, like we did in the transit system for, let's say, London, and a lot of transit systems here too, like with the Metro North as well. Your experience, whether you're going from a bus to a ferry to a train to where it should be a seamless integration all along for the consumer in terms of ways to pay, right? So that's the kind of what we look at is from a perspective of interoperability and then obviously the safety, security, authentication. I mean, all of those things go hand in hand. But it's about making it easier to pay. Now, to give you an example, but also leveraging data and analytics today to help and empower, whether it is merchants or whether it is governments. So today, I can take data and that same transit information, you can go and we work with governments, for example, how do you leverage that data for infrastructure and investment purposes? So when we're looking at transit and mobility, there's the consumer angle. How do you as a city or a city government use that for route optimization? So when your peaks and valleys are from a route optimization. I could get an SMS if I'm in Singapore, using this tollway coming into work or in London, and then to be told, look, you can get a discount if you use this alternate route, right? So I can divert traffic and I provide incentives real time to have consumers. So do I need to build, additional 4-lane highways or, added infrastructure, or how do I use my, route optimization by leveraging data? So I think that's what we are looking at, leveraging data, harnessing that, and providing those services.
Yeah. So Matt, for the prepaid market, we think about, and people in this room may not think about this often, but there are literally tens of millions of Americans who rely on prepaid as their bank account. They don't have it, they're underbanked or they're unbanked. I suspect a lot of Mark's customers are coming in using prepaid cards, and we still call them prepaid cards. So what does all this change in technology mean for prepaid? Is it gonna be a plastic card, or are you kind of thinking about the next phase of prepaid as a prepaid account that you're carrying around on your phone or another device? Are we phasing out cards, or are they gonna be around for a long time?
Well, we've been phasing out checks for a long time. So I think cards are going to be here for a while. But what we think about is how to take our account and make it that much more usable, right? So it's the account plus a card, plus the ability to log in on your phone, plus the ability to call us, plus the ability to get an SMS or a push notification, or Skygram. There's a lot of different ways for us to communicate with our customers. Sometimes it's just as simple as using an email. I think one of the things that's interesting for us is we talk about the digital financial solution, but I have 30% of my active customers, they haven't logged in the last month, but they're still using my card, and they're still spending, and they are really good customers for us. So I think the future is a continued fragmentation and additive features for a prepaid card or a mobile device or chips in your head.
Right. Brad, you bring a perspective. I mentioned in introducing you that you're active and engaged in Canada, but you also have an Australian perspective as well. What's your global perspective on this question of form factors, what we use to pay, how that matters for deployment of digital financial services?
Look, I think all the comments around making payments less visible and trying to make them disappear that I think Steve started with, and I think for all of us, that's sort of what we're trying to get to, is that the payments actually operate in the background. I guess the challenge for the types of organizations that I've been working with, Payments Canada and APCA in Australia, is that they're payment system operators or rule setters. So I think for traditional payment system operators, and also for central banks who may be running high-value systems or bulk payment systems or check systems, the challenge for them in terms of modernization is how do they reform and change their own infrastructures in terms of speed, 24/7 availability, data, functionality. How do they create the smarts in the center that can support all of these great things that happen on the peripheries and further up the stack? So I think that's the big challenge for us, is how much smarts, how much investment needs to be made in some of these middle infrastructural layers that able to support the kinds of things that card schemes, merchants, and technology providers want to be able to provide customers.
Steve, I want to ask one last question, then we have to go to Q&A. What's Google's perspective on this? I mean, we have a lot of different players here, card networks. We haven't talked about what the banks are doing on their own. They're deploying their own wallets. They want to, make sure that their brand stays prominent. Retailers are doing their own thing. Obviously, Walmart's prominent, but Target's doing his own thing. Starbucks has their platform. Chick-fil-A, Dunkin' Donuts. A lot of different retailer wallets out there. Obviously, the card networks are doing wallets. What's Google's perspective on where this all ends up? Do you care? Obviously, you want Google in there, but how do you fit into this ecosystem as the different parties are struggling?
Our goal really is ultimately to satisfy the end user and make sure that when they're transacting, especially on their Android devices, that it's secure and efficient. And then that obviously is the virtuous circle of helping the merchants who are advertisers, convert more sales. And so we're really open. That's part of the Android story, is that it's an open operating system. So, we have integrated, PayPal and MasterPass and Visa Checkout, and we're having banks like Discover and Bank of America now. You can actually provision your Android Pay token right from within their apps. So we have a very open architecture, and so yes, it's all about collaboration and streamlining and efficiency and how we can help make that happen. But the end game is all about the end user and making sure this, it's all working well for them.
Gotcha.
Yeah, we're really pretty silly, crazy, passionate about that.
All right, I am directed to ask all of you if you have questions for our panel. And I suspect you might. Here we go. We have the microphone right over here, please.
Hi, Joyce Searles from Customer Commons. So Steve mentioned about what is the consumer advantage. I forget what term you used exactly, so I'm back to that. What I have a wallet. That's what I have in my handbag right here. I have a wallet. Okay. Now, what I see here is 20 wallets? Or, there's at least 5, but there's many more. So, what would really help me, and Mark, you alluded to it when you said the customers were so grateful for the fact they got a receipt on their email. Now, what I have is email. Okay, I can just, print out my emails or try to search my emails. wouldn't it be a really cool thing to have some way for me to dice and slice all the information that you're sending to me? Because at this point, in 1998, I had like 25 vendors that I had to manage, like, the doctor, the school, the bank, whatever. Today, I have 480, because every time I go click, click, I have another vendor. So if you want to give a proposition to help the customer to align with that, give them some way to have a wallet, even if all the wallets feed into it, and give me some way to dice and slice that information so that I can see, oh, wow, I'm spending way too much money at Uniqlo. I need to go somewhere else. Just a question.
Does anybody have a product for Joyce? Okay. All right.
You want to take, I'll just give you a perspective, and I think, Steve, if you agree, when you talk about, let's say, MasterPass, you mentioned, right? Now, as a consumer, I can register. It's not only about MasterCard, but I could take actually, any bank, financial institution issued, whether it's a Visa card or, or an American Express card or a Discover card, and you could actually add it in through, and register that and be able to pay, just right through the wallet. Right? So it's not so it's not only about exclusivity that our MasterPass is working only for that particular brand per se, but the idea is to integrate for the consumer and add into your wallet all of the different institutions that you deal with and have a single checkout essentially. So that exists right now. So and it can be even scaled further. Yeah.
Okay, great. Other questions or product engineering proposals for the? Yes, we have a question right here.
Paul Mahadi, MAS. So could the analog be the way corporates have gone to multi-bank portals, that the consumers eventually will just have a multi-vendor portal?
I'd like to take a swing
Yeah,
at that
go ahead.
one. We were kind of giving ourselves brain damage, frankly, on this subject, because if you're a Walmart, you have every wallet provider on earth that wants to come and talk to you about stuff, and we took a simple point of view. Is like, isn't this itself an exact analog? Meaning, it's a container that I put everything in that I want to deal with, and I don't put in things that I don't want to deal with. So I have my bank app, I have my credit card app, I have my retailer app, and it's not traumatic for me. I know where they are. I know how to authenticate to them with touch. It makes it a little bit easier. Maybe this is your wallet, and we're overthinking it.
Well, let me ask you a question about that, because again, back to the history of the industry, and our card network friends may have some insight into this. The whole idea was consumers didn't want to carry around a stack of charge plates.
Got one phone.
Well, no, it's true, but there are 8 million merchants in the U.S. that accept electronic payments. So I'm not suggesting everyone shops at all 8 million of them, but conceivably you could have 8 million apps on your phone. So I wonder if that's, and again, that was the kind of the genesis idea of the card networks in the first place, have one card that you can use at all 8 million. But Mark, I hear you suggesting that maybe that's not a big deal. What do our card network friends think about that?
Well, I mean, from my perspective, just put your Amex on file at all those merchants and use whatever app you'd like.
Yeah. See, we're solving problems.
That's right.
Yeah. Robbie, do you, except for the Amex on file part, do you?
He agrees.
Okay.
Yeah.
Great.
Yeah.
Okay. Other questions? There's a question right here. Can you wait for the microphone just because of the webcast?
Yeah, it was interesting because you each have sort of touched different points and you all integrate. But have you guys sat down and figured out how you're going to deal with fraud and who's responsible and where does that sit? And
So for fraud for new technology or?
just that I have all these transactions when there's a loss, right? The consumer.
No, and they never do. Yeah. And they never do.
In the U.S. anyway.
Right. So you're asking if there's a fraudulent transaction and I used my my Android Pay on my Verizon wireless phone with my Samsung Galaxy XA, who's at Walmart, who's responsible for it?
So can I'll
Yeah,
just
go
take a
ahead.
very quick stab at it. Look, if I look at, you look at fraud, both, of course, e-commerce has grown significantly, right? So going from face-to-face to, e-commerce transactions are growing. Now, every environment, so when you talk about fraud and security, it has to be a layered approach, right? So there's no one silver bullet that can say, like, you got to remove and eliminate fraud from the system. If historically, currently fraud, by and large, are at historical lows. You're talking about roughly about 7 basis points, right? So about 7 cents for every $100 in transaction volume as such, right? Now, is that good? No. You want to continue to drive that down. But what's happening is that with the advent of when we went from, the MagStripe to chip, if you look at Europe, with early adopters of chip, fraud migrated here to the US. We were the last frontier of the developed country to go, and migrate to chip. Right, so now we've got, and now we're pretty much with chip. Now with whether it's iOS or Android, devices, Steve touched on it earlier. You've got the, triple devs, whether it's encryption, it's, tokenization. So all of that is going to, commonly working as an industry body towards, getting the right kind of standards in place and to work towards both. There are certain factors you have to take still in place, right? Because KYC is a requirement, right? And there are different levels of KYC in different environments. So who you are, what you have, what you know, those are your 3 factors of authentication. How do you make that and mesh that well, to continue to drive fraud low? So there's a lot of work. I think we work collectively as an industry.
Yeah, well, the one comment I would add is, you mentioned the 7 cents or 7 basis points, 7 cents on $100. That's a skewed number. That is the number, but it's very narrowly contained to certain categories, take up the lion's share of that.
And some it's a lot lower.
Of that fraud. In most normal, retail categories, it's much less.
Much less,
than
exactly.
that. But as far as, Android Pay is a container, it is a form of payment, but it is not, we don't set the rules, et cetera. So if it's a MasterCard card that someone has loaded into their Android Pay app and they're using it at Walgreens, then the rules that MasterCard has set, apply to, the fraud controls and who's responsible, et cetera. I will tip my hat to my friends at MasterCard. Now, they happen to position Ravi right next to me. But they have a consistent, rule set across the globe. So all these EMV transactions are, the liability shifts to the issuer, and it's the only card brand that the liability is consistent, across the globe for these EMV transactions. So we do need to move to get more consistency across the various card brands, for leveraging this enhanced security that exists, with the benefit of the tokenized cards securely provisioned onto the phones, and then every time the consumer has to, goes to pay, they have to touch their finger to the fingerprint reader on the phone or pin in, and that raises the level of security, exponentially, from especially in the e-commerce channel, from a normal, card not present transaction.
Mark, do you see fraud benefits from Walmart Pay and the migration away from the plastic cards?
Yeah, it's kind of a incredibly dense and complicated subject. But for e-commerce transactions, e-commerce rules apply, which is they're all card not present, and it's almost always the merchant that eats it. As such, we as a merchant have to invest hugely in mitigating that risk. So we probably have equally sophisticated fraud detection methodologies as a card issuer does, especially online. And adding a phone into the mix actually improves our outcomes because we have a device ID, a unique device fingerprint, we have location, we have name, we have behavioral dynamics beyond just whatever I entered into the website. And we can use those things to further reduce our exposure to chargebacks.
Right. I think we have time for one last question. We do not have time for one last question. I don't think we have any time for any more questions. And besides, it's time for lunch anyway, which Leon will direct everybody to with logistics, I'm sure. Please join me in thanking our phenomenal panel for a great discussion.